Hey grade 11s, going to be working through this question on partnerships. Firstly, balance sheet notes and the balance sheet and analysis and interpretation. Okay, so it says Tawa Nodada and Nkosi Tali are partners in the firm who trades as NT Traders. The financial year ends on the last day of February and required we are going to do the following notes to the balance sheet at the end of February 2020, capital, current account, and we're going to complete the balance sheet. Okay, so the balance sheet here, I'm just thinking into the future a bit, is often quite tricky because of question marks and balancing figures. So we're going to see if this pops up in this task. Capital and current account, also two equity accounts that are very partnership or that popped up in partnerships. Capital was around in sole traders, but current account now is also an equity account for partnerships. There's an extract of information from NT Traders at the end of February 2020. Capital of the two partners given to us. Capital or current account of Nodada and Tiali on the 1st of March. So those are opening balances for the year. And we also notice that Tiali has a debit balance of 7450, meaning he's overdrawn his account over the previous year. Drawings of the two people, of the two partners, mortgage bonds, so they obviously have a bond on some property. Creditors control, debtors control, accrued income. Okay, so at the end of the year, they've maybe made an adjustment for money that they're waiting for. Trading stock is a question mark. That's what I was hinting at just now. We might have to work that question mark out in order for our balance sheet to balance. Accrued expenses, income received in advance, also some adjustment accounts, cash float, and bank overdraft. So they've obviously overspent their money this year. Now information is given. And also if we look at our balance sheet, remember I'm just going to be completing figures. I've already got the answers in here and we're just going to be highlighting the answers as we go. So the information, T. Nodada decreased his capital account by withdrawing an amount of 50,000 Rand from the business during May 2019, and this was properly recorded. Okay, if it was properly recorded, it means that Nodada's capital here of 450,000 was not 450,000 at the start of the year. If he increased his capital by 50,000 Rand during the year and it ended with 450, it means he must have started with 400,000. So if we go look at our answer here, or rather not, let's read again, my bad. He decreased his capital. There we go, he decreased his capital. So if he ended with 450,000, he must have started with 500,000, quite right. So there's the answer, 500,000 beginning of the year, capital withdrawal of 50, meaning he ends with 450,000. Charlie in information B increased, read carefully, increased his capital contribution by giving equipment valued at 85,000 to the business, and this was also properly recorded. So if Charlie now had a capital balance of, let's go have a look, his capital was 275, that means at the end of the year was 275, and then if he gave 85,000 Rand equipment, we have to subtract back to find out what he had at the start of the year. So he ended the year with 275, he gave an additional capital contribution of 85, meaning subtract backwards, he must have started with 190. 6 marks in the bag, should be very doable. Then number C, T. Nodada withdrew on the 27th of February 2020 additional cash to the amount of 1,500. This transaction was not recorded. Okay, so if he's taken out cash, obviously bank overdraft is going to get bigger. So we must remember that as well. So drawings for Nodada of currently, how much was his drawings? Currently 87,950. It was Nodada, hey? Yes. Nodada's drawings was 87,950, and that would need to go up by this additional, how much did he take out? An additional 1,500 Rand. Where is his drawings going to be shown? His drawings is shown as part of the current account. So if we go to the current account, and there were two format options given, and I prefer this one over here, right? Drawings for the year, Nodada's column is now no longer going to be, what would we say? It's no longer going to be 87,950. 87,950 is going to be 87,950 plus 1,500 for Nodada, and that makes his drawings 89,450, right? So that's one piece of the current account note completed. Ignore the other figures for now. the bank overdraft is, as a result of this withdrawal, going to increase. Now, where is the bank overdraft shown in the balance sheet? Bank overdraft is part of our current liabilities, and this has got its own line because we don't want to hide it in trade and other payables. So the bank overdraft was currently, let's just remind ourselves, it was currently 4650, and it's going to go up by another 1,500 Rand because our overdraft is bigger. He's taken out more money. Right, so that's that adjustment done, and we can go on to the next one. The net profit for the year, I'm going all over, the net profit for the year was 291,950. Now, where is this net profit reflected? It's reflected in our current account note, and it would have been over here where my cursor is there. Okay, there is where the net profit would have been. Okay, over there. Right, it's not going to be shown there. We weren't given a total column, so let's just remember it when it comes to working out the final share. Right, it says there, division of net profit between the partners. T Nodada is entitled to interest on capital at 12% per annum on his capital contribution for the year, and we must consider the movement during the year. So to remind ourselves, Nodada went from 500,000 to 450,000 on the 31st of May. So if we started on the 1st of the year with 500, maybe you can open your calculator and turn it on. 500,000, right, would have been around for how long before he made the change? March, April, and May, right? So 3 months, 3 over 12, times the percentage of 12% would have first of all given him 15,000 interest on capital for the first 3 months. Then it went to 450,000 times 12% times the remaining 9 over 12 months, and we would have got 40,500. So 45,500 for the last 9 months, as well as 15,000 for the first 3 months, would have given him interest on capital of, let me see, did I say that right? There it is, 15,000 and 40,500 would have been interest on capital of 55,500 for Nodada. Okay, let me just write it out for you once more. It was 500,000, right, times what percent did we have? We had a percentage of 12% for the first 3 out of 12 months, and then we'd add, it went down to 450,000 for 12% for the remaining 9 months. Right, so that would have given you the 55,500 for Nodada. Right, then we go on and we carry on reading, and it says he's also going to get a salary of 2,400 Rand per month, more than I think it could have been than that of N Charlie. So let's just pause for now. If we think of N Charlie, he was given an annual salary allowance of 72,000, which we could just go and slot over there for Charlie, right? 72,000 can go there for his salary. If that 72,000 is for a year and we divide it by 12, that gives us 6,000. So Nodada is given 2,400 Rand more per month. So 6,000 for him is actually 8,400 a month. And if we times that by 12, we're going to get 100,800. Happy how we worked out salary for Nodada. Right, carrying on with Nodada, we've finished with Nodada. He's done his interest on capital and we've done his salary. For Charlie, interest on capital has been given for you of 23,650, so we can go slot that in there. Right, there is Charlie's interest on capital of 23,650, and then it also says that Charlie is getting a bonus, good for him, of 10,000 bucks. Right, at this stage, right, we can add up the primary distribution. So these 1, 2, 3 lines can be totaled up there. So Nodada got 156,300 and Charlie got 105,650. Right. If we have a net profit, how much was it again? The net profit was 291,950. 291,950. So of the 291,950, right, let's work this out. We have got 291,950 of net profit. We have already dished out a primary of 156,300 to the one partner and 105,650 to the other partner. So how much profit is left, or have we maybe dished out too much? Let's work that out. 291,950 minus 156,300 minus 105, 650 is 30,000 on the dot. So we have got 30,000 still to distribute. So looking at how the final distribution is split, it says remaining profit must be divided in the ratio 2:1 between Pule and Lelosa. I'm guessing that is Nodada and Charlie, also a small error there. Okay, so if we've got 30,000 left to distribute, 2 out of 3 will go to the first partner, Nodada, and 1 out of 3 will go to Charlie. Happy? 20,000 for the first guy and 10 to the second. Right, so looking at those two lines, the primary and the final add up together to give you the net profit row at the top. Happy? So just let's make sure for ourselves 156,300 plus 20 is 176,300, and the same procedure would have worked for Charlie. Also, as a check, if you added 176,300 plus 115,650, you should get the amount of the net profit. Okay, if there was a total column, that's where it would have been, the net profit. Okay, now we need to move on to the drawings line. Let's see what else it says maybe about drawings. Does it say anything else? No. So drawings for the year for Charlie was 78,000. We didn't have to adjust his as we did for Nodada's. So how do we get this next line? This next line, by the way, is often referred to as retained income for the year. This means the amount that they have not spent this year, they've retained. You get that line by saying the opening or the net profit at the top, 176,300, minus the drawings figure of 89,450, means that Nodada retained 86,850 and Charlie retained 37,650. We then bring in the balances at the beginning of the year, and sometimes it's called retained income, right? But purely it just means their current account balances at the beginning of the year. So from the information, what were their current account balances at the beginning of the year? Nodada had 15,565 and Charlie had a debit of 7,450. So when we bring them here to the note, you're going to have brackets for Charlie and a normal 15,565 for Nodada. The last line simply is to add the previous two lines together, and Nodada's got 102,415 and Charlie's got 30,200. Obviously, which partner is looking a bit better? Nodada is looking better because he's got access to just over 100,000, where Charlie can only take out 30,200. Right, while we're here, we could take those two figures, total them up, and put them in the equity section of the balance sheet. So together, 102,415 and 30,200, when we move to the balance sheet, oh, it's grayed out there. Okay, so we're not required to put it there, but we could have put current account and capital underneath the equity and liabilities section. Right, moving back to our adjustments now. Number G, says an amount of 15,900 must be paid as a repayment on the mortgage bond to Bartman Bank during the next financial year. Okay, so that simply means that we are going to have here repayment of loan or current portion of loan. That could possibly also be put as part of trade and other payables, by the way. There it is, 15,900 as the adjustment G said. And where are we going to take that away from? From the actual mortgage bond in the non-current liabilities area. So mortgage bond was sitting at 180,000 minus 15,900, leaving us with 164,100. G done. Adjustment H says the financial assets, so fixed deposits, are of 75,000 Rand at Parys Bank consists of fixed deposits, one of 45,000 which matures on the 31st of March 2020. Now, why would they tell us that? They're telling us this because it would no longer be a long-term asset. It would become a short-term asset. So moving to our asset section of the balance sheet, here you have got current assets, inventories, trade and other receivables, and cash equivalents. So you will note that in cash and cash equivalents, there is a 45,000 Rand appearing there. That refers to the 45,000 Rand that would be maturing from Parys Bank as a fixed deposit within the next 12 months. Where would it come from? It would come from the fixed assets under non-current assets. You'll see here though that non-current assets are grayed out, so you wouldn't have needed to minus the 45 from anywhere. You've only needed to add it here in cash and cash equivalents. Right. What else? The current ratio for 2020 was 1,8 as to 1, and I'll get there shortly. Before we get there though, let's just go look at the bottom area of our non-current or of our equity and liabilities. Obviously equity is grayed out, non-current liabilities is done. Current liabilities, let's look at trade and other payables. Trade and other payables comprises of what accounts in our list of figures? Creditors control most definitely would go to trade and other payables. Which else? Accrued expenses of 5750 would also go there, as well as income received in advance of 1550. Those three figures are these three figures in trade and other payables. Add them up and we've got our trade and other payables figure or total. We can then total our current liabilities as 107,450, and here's where the catch comes in. The last adjustment of this question says that current ratio for 2020 was 1,8 as to 1. So listen carefully. What is current ratio measuring and comparing? Current assets as to current liabilities. So if your current liabilities is 107,450 and that represents the 1 in your ratio, how would you work out the total of current assets? You would simply take it and multiply the current liabilities by 1,8. Okay, so your current liabilities are 107,450, sorry, and if we times it by 1,8, we're going to get 193,410, and there it is, 193,410. How did we get it? We went 1,8 times the current liabilities figure. Okay, then we clean up the current assets. Trade and other receivables, what's going to go into trade and other receivables? We can go look at our list of figures, and which ones do you reckon? Money we're waiting for. Debtors control, most definitely, 37,300, as well as income accrued of 4,760. So those two are those two, and it totals up to 42,060. Trade and other receivables done. Cash and cash equivalents also has got a little bit extra. Cash float, 3,300 Rand would need to also appear there as well as that 45,000. So cash and cash equivalents totals 48,300. The missing figure then, this question mark that we had for trading stock, therefore comes here as inventories, and it would simply be the 193,410 minus the other two, leaving inventories with a total of 103,050. Okay, so although this balance sheet has got some things grayed out, this whole balancing figure thing is quite important to learn from. Okay, the last part of this task, which I'm going to just go through quickly now, talks about some ratios. The following information appeared in the books of MM Traders, so a totally different company, at the end of June. Calculate and the following and give comments at the end of June 2020. The current ratio. So the current ratio is current assets as to current liabilities. We don't use any averages here. So there's your current assets there. There's your current liabilities over there. And going to the answer, there's our answer. One as to the other. Make it into a ratio with the 1 always on the right side. 2, 1. Is that right? Maybe that's meant to be 2 as to 1. How do you get it into a ratio? You divide both sides by 331150. And it's going to be exactly 2 as to 1. Okay, they also ask you to give comments. The basic comment that they've given here, which is very basic, says the current ratio has decreased from 3,3 as to 1 to 2,1 or 2 as to 1. So it's reduced, and I'm trying to see where they gave you last year's. There, they gave you last year's over there. And what could your comment also say? You could say that possibly you have less current assets to settle your current liabilities. you should also say that the situation should possibly be monitored, as further decreases in the current ratio would be bad. The second part of the required asks you to work out the average debtors collection period. An average implies that we need to work out the average debtors between the 2 years. So if I go and highlight those two figures, trade and other receivables, we do make an assumption that the whole of trade and other receivables is debtors control, which is a bit of a risky assumption, but that's what we had to do in this task because there's no other information to go on. So the formula for the average debtors collection period is average debtors over credit sales. So half of the two trade and other receivables figures, okay, added up. Credit sales, we can go find this by saying, yeah, there it is there. Credit sales for the year 2350,000 is going to be our denominator. We times by 365 to get our answer in days, and we get an answer of 36,7 days. Right. The comparison or the comment can say that the collection period has improved from 54 days to 36,7 days. There was the 54 over there. Right? Is this good? Yes, this is very good because debtors are paying us far quicker than last year, which is a great improvement. Okay, I trust that this activity, both the balance sheet and these two ratios, have assisted you, and I look forward to making a few more videos for you in the future.